Well, good weekend, all. Ira Epstein with your metal market wrap-up, and this is your weekend edition where we'll deal with weekly charts for this Friday, the 7th of June, 2024. And what a day. Before we get into anything, let's take a look at the market-moving event, which was the non-farm payroll. 272,000 jobs. They weren't looking for 190. The numbers were 175 to 190. Whisper number was 158. You had a number of people saying 140. You still had Citibank and JP Morgan thinking a July cut was coming. Both have thrown in the towel. They realize that can't happen now with that big of a job. Unemployment rate went up to 4%. And you'd say, well, how? All right, well, it can. And remember, there's so many things at play here. You're seeing fewer jobs being offered. We saw the JOLTS report. We saw ADP this week. And yet people are grabbing the jobs that are there. They're still very much in the service industry. I sent all my subscribers this morning the whole report so they can go through and see what they've got. The important thing is the average hourly earnings climbed again to 0.4%, and you went up 0.2 on a year over year. That keeps the Fed on hold. And we're going to hear from the Fed chair this Wednesday. And as much as he'll want to talk the way that he has, he's got to keep saying we are data dependent, and they don't have the confidence yet in the data with the combination of labor and CPI for the Fed to make any moves from where they're at right now. Did you hear the word? Any moves, down or up. I think they'll just stay where they're at this point in time. Now, the important other thing is you're going to get your dot plot this week. And we'll take a look and see which members, they don't tell you which one, but how many members is the right grammar, are looking for cuts and where. We'll see how many don't think anything in 2024. There may be some that surprise you that happens with too. This market's surprising. It is holding up. What we thought was restrictive and going to hurt companies, well, if you're anything around the tech sector, you're watching the NASDAQ and the S&P just run. When you get to the small caps, they're feeling the pain because they are sitting there with companies dependent on interest rates. Small caps, that's what you always think, and they're being penalized. We thought that the consumer would get annihilated with these high rates, that homes would be annihilated. We do see the slowdown in homes. This is when it should be booming. We're not seeing new home sales explode in any manner. And while we got down on Thursday, which sounds so long ago, it was yesterday, to 6.99% on a mortgage, well, guess what? Come this Thursday, with the way we're going right now, you're probably going to be back over 7. One of the questions that I posed all week long, and I didn't get an answer to, not from you, but from the market, was the dollar versus the euro and the Canadian dollar. Both of them stepped to the table and cut interest rates. We will not this week. I mean, tell me any reason that the Fed should do it as to what the other members will agree with, and you won't get that. Too much pushback, no reason to do it. The economy's doing just fine, thank you, ma'am and gentlemen, because of it. You did close down today, but up until the last 30 minutes of trade, you had no idea if you were going to be up or down in the S&P or the NASDAQ. No way. I was watching it all day. I gave up and I went and watched some time trials in the F1 racing in Canada because I knew this is just how it's going to finish. By that hour, I wanted to see the time trials. Where you got hurt, though, was the euro down 88 points. Where you got hurt, even the pound was down 75. First one up and made a higher high than yesterday. Interesting day. The yen down. Did you see the Mexican peso get beat up this week? Unbelievable. Really bad, because Congress may just not even wait for Ms. Sheinbaum, might just pass some of the AMLO's ideas. Something strange going on in her own party there. All right, but we're talking here about the metals. And for metals, you were down $65 in gold. Now, that's not a weekly drop, a one-day drop. You were down nearly $2 in the silver market. 20 cents a pound in the copper. One of my goals in copper was 448. You're right there. Now, when I say goals, I admitted to you I was wrong in copper earlier. And you never, on the futures, got involved. I had bought I had not bought. I had told clients to buy. That's the right grammar, COPX. And just over a $2 loss, I said, enough. I don't want you hanging in there. We're not right. Can I be any clearer? We have plenty of other things we've done right. You get rid of your loss, and away you go. All right. In gold, it's not a bear, okay? Yes, it dropped 65. For the week, you're not even down 1%. On a month, well, I said week, for a month. The month, though, is only 1 week old. For the week, you were down 0.76, beginning of the month and the week at the same time. So you can see what's happening. Could you be headed back to the 2243 level? You could be. You could go to that 18-week average. This market's got problems right now. You've got a group that might be caught here. Why do I say that? Watch. You suddenly have lower highs, lower lows, bearish. So the key to me is going to be this week's high. If it's taken out, go back to the drawing board. You might be turning bullish. Not so, where could you be going? Right here, the 2243 level. Is it still got a bullish flare gold? Yes. Why? Because as long as you're over the 18-week average, that's the support zone and you have your upside bias. This is a correction within a bull market at this point in time, or a market with upside bias, if that's what you want to call it. When we look at Bollinger Bands, well, they're not in play. You couldn't make them on this run. You did here, you stalled out, but then you made the higher high and went nowhere. So where are you in momentum? You're just turning down. There are traders here that can get caught. And just be on the alert. They're not on the alert. If you're watching, you are. There could be another $50, $60 to the downside before this is done. The gold-silver ratio on a weekly basis, this is just a bounce within it. Daily was different, but it too gave you a correction yesterday, and we'll talk about that next week. Why are we talking about that today on the daily? When you look at the silver, turning down in momentum. So, like the gold on a weekly chart, you have room to come down here. You can get down towards that $26.70, $27 an ounce level. Why not? If you've caught people here, the market will let that go. It depends how strong the dollar goes. The market's got two enemies right now in the metals. What are they, folks? Interest rates higher for longer. I know the naysayers will find over the weekend reasons to believe that isn't the case. It is the case right now. And a stronger dollar compared to other currencies. Those are headwinds for the metal markets. In the copper market, on the weekly chart, the daily got to the objective. My guess is how much are we moving each week? I'll give you an idea what I think. You're moving roughly 3 cents a week. Let's call it the 430 area is probably going to be close to where I think the market's going to try to find its first support, hitting that 18-week average. So far, the pattern on the weekly chart is still higher lows, higher highs. But when you lose the embedded reading, the odds favor that price and the closest moving average, in this case, the 18-week, will make a run at each other. In the platinum market, higher lows, higher highs. As I see the market coming in through here, next support is the 952 level. And like the other metals, you haven't done the damage on this chart of creating the pattern of destroying the higher low, higher high. In the dollar index, well, we've been in a bearish trend. You couldn't make it to the Bollinger Band. You negate it. Doesn't mean you start a bull trend. If you take out the 105.13 level, and that's how I'd take a look at that. Now, I'll be writing about this. I've already written up this week for a lot of the traders my weekly report. It won't go out till Sunday night, but I discuss, example, what is the difference between establishment and household numbers in the surveys for the jobs report? I give you the definition so that you understand how you work with them. Then we'll review other areas here because this is so important. You know, if you go to our free offers, you can get my research too. All you need to do is go there. these behind me are all the free offers. You just move in here and you hit select an offer. And when you do that, it puts it into a cart for you. When you're through selecting, at the bottom of the page, as you get down there, what you'll see is an area for you to fill out your name, your email address. If you have any comments you want to make, that's a great spot to look at them. I look at everything that comes in the company. My day is full. That's putting it mildly, but thank God I only sleep 5 hours. That's about it a day. This is where you'll fill out everything and put it in. It'll come to me and away you go. With that, I'm Ira Epstein. Have yourself a great weekend. I'll catch up with everybody on Monday morning. You take care.